Let's get the read on things from John Layfield. We've got Christine Short joining us and Rich Karlgaard over at Forbes. Rich, begin with you and your sense of where, particularly on the trade front, a little bit of stabilization today, about a short-lived rally. If you think about it, from our highs now, we've given up, about 350 points over the last roughly 24 hours on the idea that this is escalating. Do you think it is?
I don't. I think the second round of $200 billion trade threats that Trump issued a day or two ago is a bluff. I don't think this is the hill that he wants to die on. I think he wants to be seen as a winner. Winner means having a good stock market and a good economy. He'll push it because he promised his base he would. The hill that he's going to die on is immigration.
Interesting. How do you see things, Christine?
I absolutely agree with Rich. I mean,
does that worry you in and of itself that you're agreeing with Rich?
No, not at all.
Okay, good.
This is a negotiating tactic. Trump is using this as a negotiating tactic. I don't think that it will actually go through. Let's be honest. Tariffs aren't good for either country. It would shave about a few tenths of a percentage point off GDP for both the U.S. and China. It's in neither of our economic interests. Trade really benefits all global players. So I don't think he's going to go through with this. With that being said, China certainly imports a lot less from us than they export. And so they have fewer levers to pull as far as tariffs go. So they can't really go tit for tat for us there. And they've kind of been trying to say such things. I think what you're seeing with the markets right now is this fear, especially with Apple, a lot of the suppliers, that they would perhaps go for companies that operate heavily in the country and maybe with boycotts. That, of course, would be going against WTO rules. However, It seems to be a fear in the markets right now.
Well, I hope she's right and Rich is right, John. I have my doubts that the president wants to wash his hands of this, that I think he actually relishes this and he thinks he is in a position, he might very well be right, of advantage here, that the Chinese have suffered more, certainly in their markets, than we have from this, that the Chinese have far more goods coming here than we have going there, so they have a lot more to risk. What do you make of that?
I think that is what the president believes. And when you talk about tariffs themselves, yes, Christine is right. Tit for tat, they can't go with us. We have $130 billion going their way, $500 billion coming ours. But what they did earlier in the years with Korea was they did a boycott. Despite the WTO, it's against their rules. But they cut Hyundai sales in half. And when you look at companies like General Motors, who sell more cars in China right now than they do in the United States, Starbucks, who's trying to double their presence in China right now. To me, that's the way they go after it. They also have about $550 billion of goods and services that are in China right now. I think Chairman Xi is in a place where he can't blink. He has a lot of problems right now in China, and he can't be seen to be backing down to a Western power.
Well, we'll see how that sorts out. I want to switch gears on the deals that are still alive and well, certainly in the United States, particularly in Disney's battle to take 21st Century Fox's assets, or key assets, excuse me. So far, a superior bid to Comcast. I say so far. What do you make of it, Rich, and where this is going?
I don't follow that one as closely as some of you others do. Obviously, you guys would have an interest in it. I really hope the government keeps a hands-off position on this, because the next one to get regulation is going to be big tech, and I think that would be a big mistake.
I'm just making a big aerial view point on this, Christine. And yes, Rich is right, the point that this is, my parent company that's getting all of this interest, even though it would not involve Fox Business, Fox News assets, et cetera. But there is a bidding war going on. That's very, very clear, with companies that have the wherewithal, either through stock or cash, to make it happen. And that there's frenetic activity in that regard. That shows a lot of confidence, I would guess, in the underlying appeal of the deal, or for that matter, the environment in which they would make it. And I'm wondering what you make of that, and whether we'll see more of this. What do you think?
I think the environment's great for M&A right now. We've got companies with more cash on their balance sheets than they've had in decades. And, they were already doing quite well, but with tax reform, they're doing even better. And, we'd like to see them put that money to work, not just in share buybacks, which is just sort of a cop-out way to spend your money, but in acquisitions and CapEx and R&D spending. And so I think you're going to see a lot more of this. We're coming into Q2 reports in the next few weeks here. I'd expect to see a lot of S&P 500 companies either announcing new CapEx plans or research and development spending. And, there's been a few, even tech companies that have come out and said, we're open to acquisitions. And so I think the environment is certainly ripe for that.
I know this was inspired last year, a lot of this media attention, particularly when it came to 21st Century Fox assets. But, John Layfield, do you think that the tax cuts have changed everything, that companies have more wherewithal now to make this sort of thing happen? We've seen it in the first quarter where the numbers that came in, we'll likely see in the second, third, and fourth quarter against year-ago comparisons when the tax cuts were not in effect. And that alone has changed the environment for this sort of stuff.
I don't know if that alone has changed the environment, but it certainly has changed the environment. When you talk about Apple bringing back $200 billion and Apple trying to get Apple TV, this is all about Netflix, by the way, this Disney acquisition. I own Disney for this particular reason. They're trying to compete with Netflix. But when you talk about Apple bringing back $200+ billion, why don't you just buy the NFL rights? And you can do that when you're repatriating money back. And I think that's what's going to happen. We already saw the EPL rights go to online. I think you're going to see that going forward. But yes, I think this tax repatriation is a big part of that because they have that use of that money now.
Rich, your thoughts on just all that tax money that's free-flowing these days?
Well, that's a great benefit of the tax cut. I mean, and I'm all for share buybacks. Maybe it's not the first thing that you would hope for, but share buybacks lift up shares, and tens of millions of people benefit by shares going up. So,
well, I can see
however companies want to use their money,
it's not very, very creative. I know they're allowed to do it, and it does have a desired impact and all, but something like deals or expansion, that kind of tend to get more attention when they happen, right?
Well, sure, but it's not the worst. The worst is that the government takes the money and squanders the money. Sure, I would love to have every company talk like Apple and talk about spending within the United States, but a share buyback is a good consolation prize.
All right, guys, I want to thank you all very, very much.